Welcome back to Squawk Box. Rick Santella here, live at CMHQ with the important breaking news on this Wednesday morning. PPI, wholesale inflation for August, expected to be up 0.3. No. Down 0.1%. Down 0.1. Wow, that would be the first negative number since April of this year when it was minus 0.2. If you strip out food and energy, we're also expecting up 0.3. It's minus 0.1 as well. Minus 0.1, the same. Last time we had a minus number was April, and we're comping to minus 0.2 in April. And I do want to point out, last month we had up 0.9 on both those variables. They were the highest going back to March of 22. They just were revised slightly lower to 0.7, so 0.7% for each of those in the rearview mirror for July. Now let's look at ex-food, energy, and trade. Finally, as expected, up 0.3, which follows up 0.6, unrevised at this point. Up 0.3 would actually be the smallest, going back to 0 in June of this year. Now the year over year, in my opinion, these are the most important. And boy, I'm surprised. Real progress here. 2.6 on year-over-year headline. We are expecting 3.3 in the rearview mirror, 3.3. 2.6 will be the lowest since it was 2.4 in June, and it underscores whether it was tariff-driven or not. Those little blips seem to be moving back into the sunset. Year-over-year ex-food energy, 2.8%. That's core, 2.8, expecting 3.5. In the rearview mirror, a whopping 3.7. 2.8 would equate to the smallest since June of this year, but that was the smallest going all the way back to April of 24. And finally, last but not least, probably the most important, ex-food, ex-energy, ex-trade, up 2.8, exactly as last look, which was up 2.8, 2.8 back-to-back, and 2.5 was June, just to give you a comp. We started the year at 3.5, so these numbers have indeed moderated a bit after the jump on the month-over-month last month. After that minus 911,000 big revision, we saw all the equities moving up. Why did they move up? Because, boy, that really does paint a much worse labor market. And now the inflation worry, at least on the wholesale side, gets mitigated a bit. Looks like the ease in September is going to go off as planned until we see CPI. Maybe that might be a harbinger. But at this point, interest rates drop down to about 406, where they hover right now. That would be down 3 basis points in a 10, 352 in a 2-year. That would be down 3 basis points as well. And it does underscore that we still haven't been able to get below that very, very important 4%, which, by the way, is the low yield close of the year for a 10-year. Becky, sorry it took so long, but back to you, and congratulations on 3 decades for Squawk Box.